Welcome to Every LA Talks with Los Angeles real estate agent Matthias Baker Mazzucci.
All right, let's talk about what institutional real estate investors are doing and why it matters. Now, what better person to talk about this than Ashley, who has a pulse on the situation of where big money is going. Tell us.
Yeah, so with Delaware Statutory Trust, what we're going to see is where are the markets that the institutional money is moving today. Some of the key factors of these markets are going to be job growth, economic growth, and industries growing. But it goes beyond that. We want to look at states, or these institutional owners are looking at states that have more landlord-friendly laws. You know, there's a lot of challenges here in California. There's a lot of challenges up in Colorado right now. And so they're looking at the more landlord-friendly states. They're also considering where are the more tax-friendly states. Historically, a lot of investors would go to what we would call income tax-free states. And while those can provide benefits, there's still concerns that you need to be aware of, you know, for example, of insurance premiums in Florida or tax reassessments in Texas. But you can follow these institutional investors. Where we're probably seeing them go more today are going to be the Carolinas, Tennessee, Oklahoma. That's going to be a coming market. The Midwest is there. I'd say it's more limited. We don't see as many people moving there. But really, it's going to be these states that offer these benefits that we don't have on the West Coast.
Yes. And you know what? I've been in the real estate game since 2004. And one of the things, and working directly with Landlord, that's where I started in the multifamily space. What I can tell you is that I have noticed starting in 2010, 12, you know, after the recession, it's kind of like picking up. There is a tendency to move money out of California. I'm not saying you have to move all your money out of California, but you got to be able to explore those options because as we talked about it, you know, there are investor-friendly, landlord-friendly areas where you have less restrictions, when you can play around. And, you know, you hear this from investors, and I'm not saying you have to be that drastic, but you do hear this. People say, I don't own my building anymore. I do not own my building in California anymore. It's not even mine. I cannot do anything with it. And they're hitting me with soft story retrofit, which is costing me $150,000. And they're hitting me with this, they're hitting me with that. I have no control over this building, so I got to do something about it. So keep that in mind when making your decision, because you want to follow smart money. You know, maybe you don't have $1 billion to relocate, but there are people who do. And it's interesting to see where that money is going to. So that's very important. And we are seeing, you know what else I'm noticing? We're seeing a lot of retrading that it's taking place. People are buying large assets for $100 million that have sold for $175 3 years ago. Like, those are huge losses that the people are taking. I'm talking about specifically in California, like recent trades that I'm seeing of large assets that were bought for a lot of money. And now, you know, maybe their office space, etc. And now they're selling for like, you know, 60 cents on the dollar. So keep that in mind when thinking about where the money is going.
And I would tell investors who want to look at the opportunity of following that institutional money, there's ways to access that passive investor strategy and enter those markets. They can look at moving into markets and getting good property managers. They can look at triple net properties. They can look at DSTs. So there's different avenues that they can access these markets without having to go and be the landlord, the traditional landlord out of state.
Absolutely. Well, thank you for joining us in this video, and we will see you in the next video. Bye.
Thank you for watching. To find out more, visit everyla.com.